Hi everyone, today let's talk about the jobs data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the jobs data came in much better than expected on the non-farms, 272,000 versus the 190 expected, but we did see the unemployment rate step up to 4% from 3.9, which is what I expected, and that was higher than the street's expectations. And then hourly wages, 0.4 and 4.1 from a year ago, which was also higher than expectations, and you can see that here. 0.3 and 3.9 were the expectations there. And overall, this was too hot of a read to expect a cut in September. You can see it dropped to a 56% chance, down from about 68%, so could push out that first cut a little bit later in the year. I still think we're going to get one, but we still don't know when. Moving over to fear and greed, the headline number was a 45, but really what I want to highlight here is strength moved into extreme fear and breadth moving into extreme fear. Haven't seen those in a while. And then bonds, still mixed, fear on safe haven demand, and neutral on junk bonds. And you can see the VIX did not really move up at all today either. Moving over to the economic calendar, you can see those monthly wages beat on both of those. Unemployment rate stepping up to 0.4, first time we've seen a 4 handle there in a long time. But non-farm payroll is still very strong versus the 170 expected. Previous number was revised down a little bit, but not a lot. So overall, a little bit too hot like we talked about. Moving over to max pain for the QQQs here, you can see 460 was the put wall, massive put wall there at 74,000. Makes sense why we couldn't get any lower today. And then a call wall here, not a big one, but at 463, and you can see we finished below that after hours. So makes sense, right between 460 and 463 for the finish, and neutral finish here for max pain. Just to take a quick look at the charts before we go over all of the charts on the Sunday video, you can see we rallied up after dipping on that unemployment data, recovered all that, made a new all-time high on that wick, and then gave it all back, and then some more here after hours, so not great. Down 0.12 on the day. Momentum technically bullish, but basically zero. Big wick rejection, doesn't look great. Could be leading to more weakness next week. And moving over to the tasty charts here just for a moment, you can see those big wicks up to that upper ATR, didn't quite touch it, and then we sold off, couldn't even close above that second ATR here at 535.71, tested that zone and then sold off. So mixed conditions, momentum is bearish, ATR stop is at 530, so technically bullish, mixed conditions, which means sideways choppy market, which is what we got. Moving over to the Qs, similar thesis here on the charts, you can see dipped pre-market, rallied up, gave it all back, sold off after hours, wick rejection, ended up negative 0.09, and it's selling off a little bit more after hours. Momentum bullish, just barely. RSI also technically bullish, but markets seem to be hesitating and potentially showing weakness. Moving over to the Russell and the Dow, you can see both of these went negative on the day. The Russell was actually very negative, 1.17%. Continued to sell off after hours, broke my level here at 102.88. Doesn't look great. Momentum is bearish, RSI is bearish. Then you can see the Dow, momentum still hanging in there, touched VWAP, ended up negative on the day, 0.22. Again, we thought this VWAP 21 EMA zone was going to be resistance, touched that area and sold off. Could be a first test, doesn't mean that we're going to break down immediately, but it's certainly not a great indicator. If it was going to break higher, you would have liked to see a straight push, but that's not what we got, so more hesitation, if not bearishness for these markets. Moving over to Apple and Tesla. Apple was up 1.24%. Tesla was down 0.26%, again, still in this trading range. Probably going to swap this out after this weekend if we don't see some kind of movement. Has not moved in several months. Apple, on the other hand, continues to uptrend. Hit that next level again, 196.79. Technically closed above it, but it's back below it after hours, so we'll have to see what happens there. If you can hold that level, start to push back to those all-time highs around 199.50. If it rejects, we're probably going to see a push back down into the 180s. Moving over to Microsoft and NVDA, these were both down as well, 0.16 and 0.09. Not a whole lot. NVIDIA still at this trend of resistance. Similarly, Microsoft have a trend line acting as resistance. So it seems like both of these are going to potentially reject from here. We'll see how that plays going into next week. And then moving over to staples and discretionaries, both of these gave back a lot of the gains from yesterday. Staples gave it all back, down 0.5%, but still above the level, selling off after hours. Momentum might resume here to the downside. This looks a bit like a high, lower high setup now after today's candle. And then discretionaries, touch that level again, rejected from there. Stopped there yesterday. Momentum is still bullish. Didn't give back all of the gains, but it was negative 0.14. Again, still looks okay, but not great. Moving over to RIOT and Marathon digital assets, you can see both of these sold off a lot, 4.33 and 7.36. Looks like this is resuming back to the downside. Couldn't hold this trend line, couldn't hold this zone. It's right at the bottom of it, probably going to break down. Momentum is bearish, RSI is broken down, so looks like digital asset miners are looking quite weak. Moving over to stocks above the 20 and 50 day, you can see this looks pretty weak, honestly. We talked about that wick rejection yesterday, and then we did get a continuation here today. Still at the level, just barely. If it holds that, we're still okay. If it breaks down on Monday, that could be weak. And then similarly here on the 50 day, you got the 9 EMA sitting there at 45.88. Still above that. If that breaks, we're headed down to 40 and potentially lower. Moving over to the dollar, as you would suspect with the hot jobs data, just like we talked about yesterday, we said if it was hot, the dollar was going to surge higher. And sure enough, it did, 0.81. That's a massive move for the dollar. We haven't seen a candle like that in a while. Got one back here on 10 April. Now we're seeing another one here on 7 June. So big move. It's above all the short-term EMAs. You got the 55 hanging out there at 105.01. If this continues to break here, we could be heading back towards 105.50. And if this dollar continues to gain momentum, that's going to be very bearish for equities. But look at that move on the hourly chart. Massive to the upside. Moving over to bonds, as you would suspect, yields went higher with the hot jobs data and bonds fell accordingly. TLT breaking back all the way down to that trend line, down 1.83. 91.50 is that level. If it holds, could still bounce from there. My guess is that it won't on that data though. Moving over to my accounts, I made a very small amount of money. Honestly, I should have made a little bit more, but I thought we might be getting a bit of a breakout in the mid-session, so I chased that a little bit too much. But then we broke back down and I resumed my position, so managed to make a little bit of money in each of my accounts, which is fine. IWM down more than 1%, managed to make money there, so that was good. Q's down just a little bit, should have made much more on a day like this, but either way, I'm more defensive going into the Monday. 462 for the puts for $1.50. And then I have 262 calls here for the Monday as well. Decided to go back onto some dailies there for $2 credit, which was in the money. But now you can see after hours, it's only about 30 cents in the money. So still trying to play defense there. I'm a little bit more bullish than I would like to be based on the price action that we saw. But we'll see how markets open up and I can always adjust then. So I should have been more neutral, but I'm positioned a little bit bullish. Let me know down in the comment section what you think of the jobs data. Are markets going to continue to sell off on that news, or are we going to break to new all-time highs really soon? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.